Organizations still lose significant money to fraud despite all the measures taken by Congress to combat fraud by passing laws like the Sarbanes-Oxley Act or SOX in 2002. According to the Association of Certified Fraud Examiners or ACFE 2022 report to the nation, organizations lose an average of 5% of revenue to fraud each year. Many new fraud risk factors have emerged with the growth of technology and the opportunities available to fraudsters digitally. What are they and how do you mitigate them? Hi, welcome to Fraud Awareness and Tax-Related Issues Explained in Layman's Terms channel. If you are new to this channel, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. If this is your first time, please go back and watch the previous ones as they contain crucial information that will give you the background on what is discussed during this video. Now, let's continue. Many organizations lack strong internal controls to prevent fraud. That is why it is important for organizations to conduct a fraud risk assessment to understand their overall risk and find where they are vulnerable to fraud. In this video, we're going to show you how to conduct a good risk assessment of your organization. If performed and used correctly, a fraud risk assessment can be a powerful proactive tool in the fight against fraud for any business. What is a fraud risk assessment? The fraud triangle, developed by Donald R. Cressy, tells us that there are three interrelated elements that enable someone to commit fraud. First, the financial need that drives a person to want to commit the fraud. Second, the opportunity that enables him to commit the fraud. And third, the ability to rationalize fraudulent behavior. The vulnerability that an organization has to those capable of overcoming all three of these elements is fraud risk. Fraud risk can come from sources both internal and external to the organization and is one of the many types of risks to be managed by an organization. When considering the fraud risks faced by an organization, it is helpful to analyze how significant a risk is before and after risk response. Why should an organization be concerned about fraud risk? Every organization is vulnerable to fraud. No organization has immunity to that risk. The key to reducing this vulnerability is to be consciously aware and realistic about the organization's weaknesses. Only then can management establish mechanisms that effectively prevent or detect fraudulent activities. What are the factors that influence the fraud risk? Number 1. The nature of the business. The types of risks an organization faces are directly connected to the nature of the business in which it is engaged. Number 2. The operating environment. The environment in which the organization operates has a direct impact on its vulnerability to fraud. For example, construction businesses have a very different risk profile than internet businesses. And number 3. The effectiveness of its internal controls. A good system of internal controls with the right balance of preventive and detective controls can greatly reduce an organization's vulnerability to fraud. Preventive controls are those manual or automated processes designed to stop an undesirable event from occurring. Detective controls can also be manual or automated, but are designed to identify an undesirable event that has already occurred. Keep in mind that no system of internal controls can fully eliminate the risk of fraud, but a well-designed and effective internal controls can deter the average fraudster by reducing the opportunity to commit the fraud and increasing the perception of detection. Number 4. The ethics and values of the company and its employees. Any gap in the organization's values and its employees' values can significantly increase an organization's fraud risk. We addressed in our first video how important it is for an organization's leadership to demonstrate the right ethical behavior so its employees could emulate it. Every organization should conduct a fraud risk assessment and build procedures to keep the assessment process current and relevant. We conduct a fraud risk assessment because it improves communication and awareness about fraud. A fraud risk assessment can be a great vehicle for an organization to open up communication and raise awareness about fraud. When employees are engaged in an open discussion about fraud, the conversations themselves can play a role in reducing fraud vulnerability. This can also identify what activities are the most vulnerable to fraud. Management must know where the company is most vulnerable to fraud in order to prevent it. Know who puts the organization at the greatest risk. The actions of certain individuals can significantly increase the company's vulnerability to fraud. The risk can be driven by the way in which someone makes decisions, behaves, or treats others within and outside the organization. Develop plans to mitigate fraud risk. If management knows where the greatest fraud risks are, it can put plans in place to reduce or mitigate those risks. Develop techniques to determine whether fraud has occurred in higher-risk areas. Assess internal controls. Many organizations rely heavily on their internal control system to prevent and detect fraud. Comply with the regulations and professional standards. Conducting fraud risk assessments regularly gives companies a leg up in their fraud detection and fraud prevention efforts, prioritizing the most significant risks to the organization. Other questions to keep in mind while conducting the risk assessment are: you hiring the right people? Do you conduct a background check on them? Do they have a detailed job description? Do you have policies and procedures in place telling them exactly how to do their job? Do you train your employees? Do you have a code of ethics? Does the management value the employees? Does management behave ethically? Are they trustworthy? Employees look at how management behaves, and that affects how they embrace the ethical values of the company. The tone at the top matters. Keep your fraud risk assessment simple. Have you conducted a risk assessment of your company to see where you are more vulnerable? If you're not sure, contact us via email at bp.rfecs@gmail.com to help you in assessing your risk and if the controls in place are adequate. Lesson learned: know what makes your organization vulnerable, and you should have the chance to prevent it. Our next topic will be talking about the first line of defense against fraud in your organization. What or who are they? Thank you very much for watching and subscribing to the channel. Press the notification button so you can be notified when we upload new videos. Also, let us know how we can improve the content and give us suggestions on the topics you would like us to explain in layman's terms. We are also available if you want us to consult with you on the risk and practical solutions for your organization.